Hello and welcome to a CMS Forex daily video recap. I'm your fundamental market analyst, Nick Nassad. Today is Friday, July 30th, 2010. In today's report, we will go over today's US GDP release and preview the important releases from the US for next week. The US economy slowed in the second quarter of this year, and the government said that the recession was deeper than earlier believed, adding to concerns of the recovery's strength. GDP rose at an annualized seasonal adjusted rate of 2.4% in April to June, when economists were expecting GDP to rise by 2.6%. It's another piece of data that was underwhelming and adds to the string of releases casting a long shadow over the US recovery. It's also a good snapshot of where the economy is right now, as it showed that consumer spending is adding less to growth while business spending on investment actually picked up. It therefore shows the contrast between companies that may be seeing better revenues and potentially better profits, but that is not translating to more jobs and more confident consumers willing to take on purchases. The report also shows that prices remain very weak, highlighting concerns that it's not inflation but deflation that may have the Fed worried. The next FOMC meeting is on August 10th, and we'll see if there are any further steps that will be taken in order to help support the economy. Consumer spending, the key engine of the U.S. economy as it makes up about 2/3 of GDP, rose by a moderate annualized rate of 1.6% compared to 1.9% for the first quarter. With an unemployment rate at 9.5%, it makes sense that this figure is weak right now. Now, business spending on equipment and software continued its strong pace from the first quarter when it jumped 20.4%. In the second quarter, business investment was up 21.9%. Again, this highlights the contrast in the economy between high company profits and a persistently feeble jobs market, which is keeping consumers at bay. The trade gap also weighed on growth as the trade deficit widened to $426 billion in the second quarter from $338 billion in the first quarter. That subtracted around 2.8 percentage points from growth, as imports were up 29% while exports rose 10%. As I mentioned, inflation readings also shows that price pressures eased further during the quarter. Concerns about the economic prospects in the U.S. and the possibility of deflation were reinforced today when Federal Reserve Bank of St. Louis President James Bullard said that the U.S. is at risk of falling into a Japan-like deflationary trap, and that the best way for the Federal Reserve to avoid that pitfall would be to revive its securities buying program. Taking a look at next week's calendar, we see that it's a hodgepodge of data from the US, but the main event, as it always is during the first week of the month, will be next Friday's non-farm payroll employment report. The lack of strong job growth has been a hindrance to the recovery, and the July numbers are not expected to bring much joy. The forecast of economists is that non-farm payrolls dropped 60,000 in July after a 125,000 loss in June. Both declines, however, reflect layoffs among temporary census workers. Among those forecasting July private payrolls, those jobs are expected to rise 100,000 on top of an 83,000 gain in June. Two other broad readings on the economy will be business surveys to be released by the Institute for Supply Management, or the ISM. The Manufacturing Purchasing Managers Index out on Monday is expected to fall to 54.7 from 56.2 in June, while the non-manufacturing PMI scheduled for Wednesday is projected to slip to 53.3 from June's 53.8. Also on tap, on Tuesday we will get data on personal incomes and spending, factory orders, as well as pending home sales, while Wednesday and Thursday will bring other labor market reports, including the ADP employment change as well as weekly jobless claims. And that wraps up our look at the key fundamental release from today, as well as previewing the key US releases for next week. For more news, videos, and analysis, please visit our site, cmsfx.com. I want to thank you for watching and wish you a great weekend.